Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, we are going to look at the use of parabolic SARS in terms of identifying entry and exit signals for real-time trading. So let us begin. Parabolic SARS, just like many other technical indicators or analytical tools, is a series of dots placed above or below stock price candles which serve an important purpose, helping us in identifying major trends and turning points. The dots move in the trend or the direction of the stock movement. Here we have a downward trend, so the dots are placed above the candles and it moves in the direction of the trend. Here we have a change in the direction of the trend, so the dots are moving in the direction of the trend. Trend is your only friend in real-time trading, and money is the only thing that can make your account change. The parabolic SARS help you to identify and pinpoint the points of change or reversal in the trends and help you to pick a point where you can either enter a market on a long or short the market. It also gives us a signals as when to exit a particular long trade or a short trade. It is useful, as I said before, in swing trades where you can short the stock here, turn around and follow these trends and reverse your positions. It is not always reliable in choppy or consolidation phase because the number of points and the movements are very small to produce any meaningful profits. Whenever we place an order, either when we short a stock or go long, the first thing we need to do is to put a trailing stop order so you know exactly how much you're going to lose in case the indicator is not accurate. In fact, none of the technical indicators are 100% accurate. If they are better than 60% accurate, then you have a chance of making some money and preserving your capital. And another important thing is, first we have to identify the main trend. The main trend is identified by the 200-point moving average. If your moving average is going in this direction, I would trade long in this direction. And here we have like 1, 2, 3, 4 beautiful trading opportunities to go long and make good profits. Just one indicator is not going to be enough in many real-time situations. I'm sure all the experts will bring you one classic case and put it and say, hey, my indicator is the best one in the world and I had 90% success. And if anybody says they had 90% success in their technical indicator, the first question I would ask them is, what are you smoking? I need to get some of that. That's another story. Anyway, when you are not sure about the signal that is being given by any indicator for that matter, it could be the parabolic SARS, it could be the Bollinger Bands, it could be the stochastic, MACD or RSI, all of which I'm going to use in the real-time example in a minute, and confirm with other indicators. And if it shows, you make a trade and put trailing stops so you know what your maximum loss is. Then you also can look for maximum profits as the stock moves in the manner in which you expected the stock prices to move. Let us look at some real examples. Here is a S&P 500 ETF, which is SPY, and this is a daily chart for the last 6 months. Here's our 200 point moving average, and the stock is moving above the 200 point moving average. The way you identify the entry point, very simple. When a downward trend is in progress, when the dot changes from above the stock prices to below the stock price, that is an indication that there is a change in the trend. You don't take a position at the first dot. The first dot is on this one. You take a position at the close of the second dot. If it's a daily chart, you want to buy here. If it's like a 60 minutes or 30 minutes or 10 minutes, you buy a long position at the close of the second candle. That's an important point. Then you let it ride as long as these dots are below the stock price, as long as the moving trend is in the same direction. Now, when you approach this particular point and there is a change in the direction of the dots, and when you see the dots appearing on the opposite side of the stock prices, that is the time to get ready to exit. I use a few other parameters to pinpoint my exit. If I'm not sure if I want to exit here, I look at, are there other indicators that are suggesting that the stock may be overbought at this time. Let's look at, for example, the Bollinger Bands show that the stock prices are at the upper band limit. Number 2, there is a crossover of the stochastic green line. That's the short-term moving average over the long term, and this is a very excellent point to exit as it is coming down at the 70% mark. Similarly, this is not helping us, so we can't rely on the MACD, but certainly this one is helping us, but it is lagging behind the stochastic. So combining multiple parameters, we can really make a decision as how to pinpoint this. And if you are working on an hourly chart, you can go on a 30-minute chart or a 15-minute chart and see if you have confirmation with other indicators. And if so, exit the market. If you are in doubt, exit the market. Even if you exit here, fine, because the profit you made here is money in your account, in your bank account. And if you wait again and it reverses suddenly, then kaput, you're lost. Let's look at a bear scenario here, if we can find one. All right, let's take a look at this downward stock movement scenario. Here we had a nice uptrend, which was along the 200-point moving average. And now we have a dot right in the opposite direction with a big red candle. So if you were to come to the second candle and make a short position here, you could make some money, because if you follow these pink dots until it changes the direction when it comes here, so from this point to this point, you made some money and you are happy, you could exit the market. Similarly, the stochastic came here, and even if you had exited here, still you would have made some profit here. So it all depends upon how well your stomach is able to handle the swings in the stock prices. The RSI is not helping us, and same thing with the MACD, because the distance between the two lines are pretty strong. But when the trend reverses here, you have this signal is coming on, this is delayed, and this one is right on time. So this is a point I would go long without any hesitation. I would probably go long here even before the candle closes, because we have a nice beautiful upswing here for several periods. I don't know if you want to wait till here, but that's what the SARS principle tells us, but you could actually exit the market right here where the stochastic crosses over, and same thing where the RSI comes down. So you can walk through these in multiple scenarios and see what is the best place to exit. And here's, I guess it's the same thing we looked at coming down here where you can get down. And so I hope this has been educational to you. And we also have multiple videos on almost all technical analysis in real-time charts. So we are not bringing some charts from 2004 or 1986 and show that one perfect picture, because these are real-time charts. Please do subscribe to our channel, and I will see you next time. Thank you so much.